warahmatullahi wabarakatuh. My name is Diana Kristina binti Abdul Rahman. Let me discuss operating segments based on MFRS 8. So, according to MFRS 8, an operating segment is a component of an entity that engages in business activities where it includes revenues and expenses relating to transactions with other components of the same entity, whose operating results are regularly reviewed by the entity's chief operating decision maker (CODM) to make decisions about resources to be allocated to the segment and assess its performance, and for which discrete financial information is available. Not every part of an entity is necessarily an operating segment or part of an operating segment, but if these characteristics apply to more than one set of components of an organization, but there is only one set for which segments managers are held responsible, that set of components constitutes the operating segments. What is CODM? The term Chief of Decision Making (CODM) identifies a function, not necessarily the manager, with a specific title. That function is to allocate resources to and assess the performance of the operating segments of an entity. It may vary between entities, where it may be the CEO, the Chief Operating Officer, the Senior Management Team, or the Board of Directors. The title or titles of the person identified as CODM is not relevant as long as it is the person responsible for making strategic decisions about the entity segments. In the case of Berjaya Corporation Berhad, the CODM that we identify is Tan Sri Datuk Seri Vincent Tan Chi Yuan and Syed Ali Syaril Hamid. Tan Sri Datuk Seri Vincent Tan Chi Yuan is the Managing Director or Chief Executive Officer of SDM Lottery Sendian Berhad. Meanwhile, Syed Ali Syaril Hamid is the Group Chief Executive Officer of Berjaya Land Berhad. Let's move on to the segmental report used in financial reporting. The product or service would be reported as a separate operating segment if it is significant and constitutes as an identifiable business of the entity, but not all operating segments need to be separately reported. Operating segments are only required to be reportable if they exceed quantitative thresholds of 10%. Two or more operating segments may be combined and reported as one if certain conditions are satisfied. In this case, Berjaya Corporation Berhad adopts business segment analysis as its primary reporting format and geographical segment analysis as its secondary reporting format. The business segments comprise of retail, property, hospitality, and services. The retail segment includes both food and non-food categories such as food and beverage as well as luxury motor retailing. Berjaya Corporation Berhad is also involved in property investment and development, hospitality such as hotel and resorts, and service including gaming, financial service, and others. Meanwhile, the geographical segmented information is prepared based on the locations of assets. The segment revenue by geographical location of where the sales are transacted does not differ materially from the segment revenue by geographical location of assets. Berjaya Corporation Berhad only engage with Malaysia and outside Malaysia.
I will explain about two key benefits of segmental reporting for financial statement users, which are improved transparency and performance measurement. For the first benefit is improved transparency. For investor and other stakeholders, segment reporting provides a clearer picture of the company's overall performance. This transparency helps to build trust and confidence in the company's financial statements. For the firms like Berjaya Berhad Corporation, which operates in various industries such as retail, property, hospitality, and service segment disclosures, enable to evaluate which segment drive profitability or losses. Based on the Berjaya Berhad situation, we can see business in Malaysia, which is internal segment, recorded losses RM5,074,803 million on year 2024. Compared to year 2023, they earned RM5,150,534 million. Meanwhile, business in external segment, which is outside Malaysia, increased the profit from RM4,461,377 million in year 2023 to RM5,012,785 million in year 2024. So, we can see, based on the segmental reporting, Berjaya Berhad Corporation can focus on strong performance areas like retail in Malaysia and take action or strategies on retail in outside Malaysia. Next benefit is performance measurement. By analyzing the performance of each segment, companies can evaluate how well each business segment contribute to the overall success of the group. Based on report, it can tell which segment contribute the most money and which segment is losing money. Based on the situation of Berjaya Berhad Corporation, we can see Property segment grew more money from year 2023, which RM 470,064 million to RM 783,851 million in 2024. This shows that the property business segment is doing well. The reason property segment experienced higher revenue in the current year driven by higher sales of the residence units of overseas project. While on the other side, food retail business segment reported a lower revenue largely due to the current sentiment in relation to the conflict in the Middle East. Therefore, using segment report of Berjaya Berhad can evaluate each segment performance and make better decision about where to spend money on. Now, let's moving on about MFRS 134. The definition of MFRS 134 is actually a standard under the Malaysian Financial Reporting Standard MFRS framework, where Bursa Malaysia requires all entities whose debt or equity securities are publicly traded to publish interim financial reports. The standard tells the company how to prepare the financial report for a period shorter than a full financial year. It can be complete or condensed set of financial statement and can be issued semi-annually, quarterly or bi-monthly. The reason of interim financial reporting is to provide investors and other users with more timely or current information and enables users to evaluate entities' financial position, performance and cash flow on continual basis.
Berjaya Corporation Berhad had a number of significant events and transactions during the financial year that concluded on June 30 in 2024, which had an impact on its performance and financial status. These events involve market dynamics, changes in legislation, strategy changes, and shifting consumer attitudes. The most significant incident during the financial year was the strong boycott of Starbucks, a subsidiary of Berjaya Food Berhad. Caused by the turmoil in the Middle East, revenue for Starbucks Malaysia dropped drastically from 1 billion ringgit in 2023 to 676 million ringgit in 2024. Starbucks Malaysia's profitability was also greatly impacted by the boycott in 2024. It went from making 165.6 million ringgit in profit before taxes to suffering a significant loss of 45.1 million ringgit. Although management made an effort to fix these issues through focused marketing campaigns and cost-cutting strategies, the boycott's significant impact on customer condition was too great to completely recover. This incident shows just how vulnerable international brands are to change customer attitudes and outside global influences, which may quickly result in financial pressures. Furthermore, the implementation of changes to FAR570, which went into effect of Berjaya Berhad in the financial year that ended on June 30, 2024, was a significant regulatory achievement. The accounting approach of sale and leaseback transactions was the primary focus of these changes. The updated guidelines require that any gain or loss relating to the retained right of use be corresponding to the transferred right when a seller lessee sells an asset to a buyer lessor, then leases it back. Due to these changes, on the 1st July 2024, Berjaya Berhad will record 79.788 million ringgit, rise in right of use assets, and 255.59 million ringgit increase in lease liabilities. Furthermore, there would be 46.859 million ringgit increase in the foreign currency translation reserve at and 222.661 million ringgit decrease in retained earnings. The group's balance sheet is expected to be significantly impacted by these changes, showing how changes to accounting standards can significantly change the group's financial status and important ratios. Based on the Berjaya Corporation's Berhad Interim Financial Report, these are the interim reporting periods for the current and comparative interim financial statements. First, the Statement of Financial Position presents the financial position as at 30 June 2024 with comparative information as at 30 June 2023. Next, the Statement of Profit or Loss and Other Comprehensive Income reflects the financial performance for the 12-month period from 1 July 2023 to 30 June 2024 with the comparative period from 1 July 2022 to 30 June 2023. Moreover, the statement of changes in equity covers the full financial year ended 30 June 2024 with comparatives for the year ended 30 June 2023. Lastly, the statement of cash flows also captures cash movements for the 12-month period ended 30 June 2024 with a comparative for the 12-month period ended 30 June 2023. These statements provide a comprehensive view of Berjaya Corp's financial position, performance and liquidity over the full reporting cycle.